Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, November 9th, 2020. Um, Stick with most of the broad markets here and some of the internals in the broad markets. What happened today? Interesting day, that's for sure. Interesting day. We saw some unusual disparities between the Nasdaq 100, the S&P 500, and we're going to break that down. Take a look at that. I'm just going to tell you from the get-go. This market, like I said this morning, yellow flags. That's what I would call it right now. Some yellow flags on the market. Bullish trend in the S&P 500. But here's the thing. We have a lot of the market-leading stocks, the FAANG stocks, I like to call them: Amazon, Apple, Microsoft, Facebook, Alphabet. They're not breaking down yet, but they peaked a while ago, and we're gonna look at those very quickly. But let's just look at what happened today. Let's stick to the facts here. All right, so on QQQ, I'm going to start out on the daily time frame. I've been living a lot on the 60-minute charts lately, but it's interesting to note here we have a big old fat bearish engulfing. Now we've had several bearish engulfings in the last 6 months or so. I most likely pointed this one out right here. Let's see, did we have any others there? And they all don't play out. And I always say this, with a bearish engulfing candle, what that is, and you want to Google the term if you're not familiar, it's when the body, the fat part of a candle, engulfs the previous candle or more than one of the previous candles. In this case, we engulfed the previous two trading sessions solidly. And again, you look at the body, the fat part, and you compare it to the previous candles. So that is a bearish engulfing candle, which is a potential topping stick. But like many, again, quote unquote, potential topping candlesticks, you want to see confirmation. To me, that confirmation comes in the form of follow through red sticks, and as I like to say, the redder the better. If we had a big down tomorrow or if we had multiple. And so it's only something to watch for right now. Other than that, QQQ is not far off the highs. I'm going to go over what happened today with the sell-off in tech stocks and the big, recent momentum stocks that have been benefiting from COVID. And it all makes sense. The vaccine results. It's kind of ridiculous, I think, that they say, that's the Biden win. You look back at 2016 when Trump was elected, and that was a surprise back then. The market surge had the biggest rally in decades off that election following that. They're called the Trump pump because typically, Republicans and Trump's, policies are pro-business, pro-stock market, big, benefits the market. And so, anyways, I think the market, if nothing else, probably rallied more, and I think a lot of people agree on the status quo. The Senate remaining in control of the Republicans, and now you have a Democratic president, but you're not going to see any big tax hikes or anything like that coming up. But again, so let's just say. And I'll make the case right now that it was today's move in the S&P 500 was largely, if not solely, attributed to the vaccine. Well, I don't want to talk too much on that. I'm not an expert there. I'm certainly not an expert on politics. If you haven't read the headlines, Pfizer has a COVID-19 vaccine that they claim proves 90% effective in the latest trials, but they only have 94 subjects. And I said this earlier today, I believe, if I had a nickel for every time promising results came out on a vaccine or some treatment for COVID that just fizzled out, like I said, at the very least, I have a lot of nickels. So we'll see what happens there. And then think about this too. I don't know the first thing about. Well, I shouldn't say I don't know the first thing, but we have to look at this. Let's say the vaccine is effective. I know the coronavirus is, the novel coronavirus, the COVID-19, is a coronavirus. Coronaviruses have been around for a long time. This isn't the first. It's the type of virus it is. It's different from influenza, but that's another virus. And we all know this, or if you don't, the flu shots that they give you, the vaccines for the flu, it's a guessing game every year for the World Health Organization. They have to start 18 months out, try to guess what strands are going to be around during the next flu season, because viruses are constantly mutating and morphing and changing. And so that's why the flu shots are marginally effective. I know a lot of people get them. I don't get them. The effective rate some years is abysmal. So all I'm trying to say here is The markets are treating, at least today, like this is the panacea magic bullet, and COVID's going to go away. That this vaccine's, as good as it sounds, and in these early clinical trials with a small, very small, relatively small number of subjects. Enough on that. But I'll show you what we have here. So this is QQQ, and what I'm going to do is sort. I have a watch list to my right here, and I'm going to sort it by percentage gainers and losers. So I'm going to show you what happened in QQQ today. We had about, I think it was 40 something of the 100 stocks in the NASDAQ 100 up, and the rest were down. So the majority of stocks were down, and the Qs were down pretty big, because the ones that were up don't move the needle nearly as much, or at all, really. Almost half of them were up. This was the biggest gainer in the NASDAQ 100, Expedia. Let me make sure I turn off my post market. Let me just look at regular session. Okay, so this is what it did in the regular session today. Expedia, obviously, that's Expedia.com, travel and leisure. So everybody jumped on Expedia, and I can certainly say a case can be made that it was just maybe money rotating out of those big fangs to come up with the cash to buy these. But again, I think that's a little bit overdone, a little bit presumptive that the worst is over, and we're going to blast off to the moon. In fact, Expedia is coming back, and it's not far off where it was before COVID even started. But there it is, 25% move in one day. There's some resistance overhead, so there's potential for more upside. I just want to go through a few of these. Again, to make the point, I'm just going through the top gainers in the NASDAQ 100 in order. Number 2 was Booking.com, up 19%. Then Ross Stores, the discount clothing store. I don't know about where you guys live. I'm in Fort Myers, Florida. You wouldn't know there's COVID. I've already had it, so I'm getting out there more and more now. I'm still suffering from linger effects, but I'm much better. Every day it's gradual, or every week, almost immeasurable gradual improvements. I'm suffering from long COVID. Again, most symptoms much better now. I can get around, and I'm out and about. And I spent time over the weekend at 2 different Home Depots around in Fort Myers, and you couldn't park, and it's been like that for a while. So in other words, my wife will go to Ross and those kind of stores sometimes, and I'll ask her about it, but I don't think there's been much of an impact. People, at least here, again, I'm picking one city. There might be completely different shopping habits and things going on elsewhere, but and you can see they faded a lot of that pop. My point is, I think it was overdone. From the close on Friday to the highs today. At one point, Ross was up 26% in a day. Really? Again, people are shopping there anyways, and I guess Ross is in-store sales versus online, so that's the benefit there. Excuse me. And again, all I'm trying to do is just show you what was up. There's Ulta Beauty. I think they sell online too. A lot of these you see got faded pretty hard. They popped in the open today, order imbalances, and then steadily faded throughout the day. All right, so there's a common theme. I always say this: one day does not make a trend. So let's watch this, see what happens. In other words, and with the big fangs too, they were all sold down today, all of them except Alphabet, I think. There's Marriott. So, and I went through the S&P 500 as well. It's the same thing. The travel and leisure companies, hotels, casinos, and the likes. Businesses that have been knocked down with COVID. Because their business model, especially hotels and casinos, things like that, being affected. So, all right. With that being said, there was that disparity. I pointed it out in the morning. Now let's look at the charts. Let's look at the technicals here and see what we have. On the daily chart, QQQ popped that trend line. I believe on Friday I highlighted these downtrend lines on both SPY and QQQ. They were already valid because we had distinct reaction here, a couple reactions there, 2 more reactions there. Popped it and failed. So not only the bearish engulfing today, but a failed breakout above that previous reaction high, as well as this previous those 2 previous candles, I should say, in this previous reaction high. So that's bearish. That's near-term bearish. Again, you want to see what happens. I see quite a bit of red flags going on in the market. I think what's happening, a lot of it's intuition, gut feel. I don't like the feel of this market right now. I already laid out the scenario. We could see new highs in the NASDAQ and S&P, but I'd be careful here. That's all I'm trying to say. It's still post-election noise, and what happened today, especially on the leaders. Now we're going to flip over. I already showed you what led the way today in QQQ. Now let's look at the leading stocks. So I'm going to sort my watch list. It's to the right of the screen. You can't see it, but I'm sorting by market capitalization. Again, Expedia can literally go to the moon, and it's not going to really impact the S&P 500 because it's a market cap weighted index. Apple is a $2 trillion company, the largest holding here, and Expedia, let me go back to that. Where am I here? Give me just one. Okay, Expedia is about $14.5 billion. Again, compared to $2 trillion. So Apple doesn't he hardly have to budge. It has a much bigger impact, and we're going to go through those right now. And where I'm going with this is, the signature of any market, you want to watch the market leaders. In a bull market or even a bull trend, if you're looking for a decent correction, it's when the market leaders start to roll over, underperform. That's when you need to take note. And I've already made the case that we may have put in a significant top back here when Apple split. Apple split at the end of September, it was, I believe, August, and rallied for a couple days. And that's the post, split buying climax. We had a big run up there, and Apple's still well below that, as is Tesla. They split on the same day. And so what you're seeing, a lot of these market leaders are well off their highs. Apple had a downtrend line that it tried to pop today, and it failed, closed back down below it. And from where we were back in the end of August, Apple's still down 15.5%. So you need to take note of that. It's hard to imagine the market ripping to anything more than a marginal new high without these market leaders. It's just, is it possible? Technically, yes, but unlikely. Microsoft. Microsoft's doing a little better, a little closer, but you can see what happened today. It has a similar downtrend line. They had two candles, not impulsively, but were above it last week, and then boom, a rejection and a move back down. So there's a common theme. Amazon, these big tech and the FAANG stocks got sold down pretty hard today. And again, it may be a one-day wonder. It may be just rotation, opportunity, people that are loaded up, mutual funds, hedge funds that are top-heavy in these stocks, maybe rotating out into what they think is the next growth sector to come. So we'll watch those stocks going forward. Energy broke out big today, and I'll continue to watch that. Should those breakouts get built upon, then maybe there's a trade to be made. But I think today was a little too much, a little too fast, in my opinion. That would be our downtrend line, by the way, in Amazon there. Facebook, same thing. So you can see where I'm going with this. These big FAANGs getting sold down pretty hard today. Alphabet closed up. Let me make sure, regular hours. Alphabet closed up, but again, like everything else, it was faded from the open, big opening pop, and it dropped, 3.22% to just have a little stick save right before the bell right there. So, close about flat. Tesla, for months now, I've been talking about the, what I call, bull trap, potential bull trap, buying climax range. Again, Tesla had a 5-for-1 split same day as Apple in August. The media just chewed it up, spun it as nothing but bullish. Everybody wanted to buy Apple and Tesla. And again, those people that did have been smoked. Tesla had a huge correction, and then rallied back up, tried to get back in that range a couple times, and has been checked on every occasion, including again today. Popped into the range, so far rejected. Nothing huge. As I said before, and maybe it'll power up and finally break on through there. If that does, that's longer term bullish for the market. If Apple and Tesla can take out those end of August split highs, then that's going to be bullish longer term, I believe. We'll look at the technical posture of the market and those stocks at that time if it happens. But until it does, that's not a good sign for the markets. Let me just say that. And what you want to watch on Tesla, if it starts to roll over, it's had a few rejections off that level so far. You want to see it come down. If it breaks 333 with conviction, then I think the stock's going a lot lower. Then I think at that point we can look back in hindsight and say, yeah, that was a topping moment for Tesla. It's been, in a topping pattern there, kind of like a stock basing on the downside after a long downtrend, but moving sideways, consolidating. So it's about 333, 34 right there, where Tesla will most likely give up the ghost if and when that's broken and go on to hit one or both of those targets. Hasn't done it yet, so again, I'm not writing this stock off, to be monitored, to be watched. PPO's turning up at the signal line, so I can make a, I can sit here and make a bullish case, I can make a bearish case. I have no position because my convictions aren't strong, but one to watch for sure. Okay, I won't go through them all, but just again, I'm going in order of market cap on the NASDAQ 100. So we had Apple, Microsoft, Amazon, Facebook, Alphabet, Tesla, now NVIDIA at 358 billion, bearish engulfing candle today. So this is what we'll watch for. In that marginal new high today, extended these divergences, these negative divergences have been building. So there's NVIDIA, king of the chips lately, PayPal. Again, market leading stock in the NASDAQ 100, one of the bigger ones. And you have these big ranges right here. And these ranges need to be resolved by these market leaders. And bullish, on a solid break to the upside, but bearish if we break down. I'm referring to the trading range we've been in for the last few months. So a lot of those stocks are looking, if you're glass half empty, you say they're looking toppy. And maybe that's what it is. If you're glass half full, you're saying, well, they're had a heck of a run up. And there's a case to be made that they needed to consolidate, take a breather, and we might get the next leg up. You can see, and I've talked about this recently, a lot of these stocks are at these inflection points where, if we do drop down, we do break the trading range, you're going to flip some trend indicators to bearish, and there's, that boxed in range is what you want to watch for PayPal. All right, one or two more, we'll do two more. Adobe, also right up there. Again, just, nothing big today. A big down day, almost 5%, but technically nothing. We're in that range. Again, this is what I see when I look at these charts. I just see these recent ranges and big levels below, in this case, 456.40. Netflix, big range. I've highlighted this one for a while. In fact, I updated Netflix not too long ago with a lot of momentum stocks, and I told you here we broke down below the midpoint. This is my trading range right here. Very well defined, very well defined. And there's your midpoint. That's the midpoint, often acts as support and resistance. You get up to the midpoint, you either get rejected down back to the bottom of the range, or if you can break out like you did right here with that big green breakout candle, you run up to the top of the range. And then from the top of the range, the next stop is the bottom, although you can bounce along the midpoint. We didn't here, we took it out, and I think I updated it here. We went up since that update, boom, 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 today, meaning 3. 1, 2, 3 tests of that midpoint, and boom, in one fell swoop, we hit the bottom of the range. And that's what I said right back here. I think it was the day we broke the midpoint. I said next stop should be the bottom of the range because we've now taken out the midpoint, and that's what happened. Semiconductors had a divergent high here. We had a big correction off that divergent high, and the divergences as of today have only simply been extended. They continue to build. Divergences are not a sell signal, but we have a big red candle. We'll watch and see how we follow through here today. I'm sorry, in the coming days to weeks. 60-minute chart of QQQ. Here's that uptrend line. There's that wedge, divergent high, was pointed out earlier today. And look at that. Boom, breakdown, and a very impulsive move down. Close to that gap. There's the bottom of the gap right there. That's a gap from last week. That's a logical support. If we bounce there, we have the potential. We'd have to really bounce sharp and fast to put in another marginal new to extend these divergences. It is possible. Again, near term, this probably says futures go down a little more. I've turned off the after-hour trades on this chart. This is just showing as of the close today, and that's a support level. I just wanted to say again that breakdown and that move down is pretty impulsive. But there was a lot of bullish price action. The S&P 500, a lot of those stocks up today. Small caps ended up fading a lot of their gains, but they still closed up today. I'm going to get to those charts in a second. So that's I wanted to say what the Qs look like. Pretty impulsive breakdown, pretty big drop. SPY, SPY was up really big, much bigger as I pointed out at the open today than QQQ. Went on to break the trend line, uptrend line right here. And it gives us a price channel. And right here, from this point to this point, we put in divergence on the PPO. And again, pretty big move down. A full gap backfill would bring us to right about here. That, I don't know if you can see it, that dashed line that shows technically there's the bottom of the gap right there, right here. So if we get a full gap backfill, that means we'd come down here. So that's a level to look. So if you're bullish, you look for that level, and you can step in and buy there with a stop somewhat below. Somehow, if you happen to short today, again, this is a SPY. We may or may not hit that tomorrow. I don't know what's happened in the after-hour session. I could turn on those now. Let's not even turn those on. I know there's some wonky candles here. I said I wouldn't do it, but I'll show you right now. Last 2 sessions. All right, so there is the after-hour session. There's right here, you can see this red candle, and it shows a gap backfill. But when I say wonky candles, you go here. There's a 1-minute chart. Show the last 2 trading session. See these candles? I call them wonky candles. It happens all the time on the pre-market charts. These trades didn't exist. If they did, orders were filled outside. This is where the SPY has been trading. And these are all wonky candles. They don't count. Whether orders were actually filled or not, I don't know. I see this all the time in post and pre-market. This is where SPY has been trading since the close, pretty much sideways. And so that's why I had the after-hour trades turned off. If I turn them on, it's going to show that we made a perfect gap backfill today. And we really didn't. So we'll watch for that as a potential pullback target tomorrow. Okay, last but not least, for you small cap traders, IWM, worth mentioning because the futures, we had lock limit up this morning. That means they hit 7% in the Globex session. That's before the market opens at 9:30, and that means they have to stop. They halt trading there, or can trade down, but it can't go up anymore from there. So even from there, where they opened the market, there was an order imbalance open at the open, so we popped even a little higher, and nothing but a fade throughout the day. Again, I have the after hours trades turned off. This is what happened in the regular session. They faded nearly 5%, but yet they still closed up IWM 3.62. Where are we at, technically speaking? If you're long or short or wanting to be either or, there's the best uptrend line I can draw for you. You just have to exclude a few of those candles on Friday before the close, those small last-minute candles, and you have enough reactions, I think, to validate this trend line. So we pretty much pulled back to that trend line, which, quote-unquote, I'm not saying it will, but should act as support. That's where bulls should step in and buy on trend line support. If not, then you have a gap to be backfilled. And really not much, you can look at that reaction high. That would be a potential support level, but other than that, you're going to backfill the gap that's from today's open to Friday's close. Friday's close is the bottom of the gap. Let's look at the futures, and then we'll either wrap it up or move on to something else here. NQ, wow, just look at that bloodbath here. This is the reversal. Now NQ, I updated this morning. Remember, we had a lot of volatility going, and so what I said had happened this morning is we put in a divergent high. That's a rising wedge. There's your divergent high. There's your negative divergence on the indicators, and that was Sunday evening or somewhere, and we started to fade off. We broke it pre-market, briefly fell down, hit that 11,945 support, bounced up, and I said we were back above there, but we were only slightly, and right after that we reversed. So to me, especially considering the elevated volatility today, I view this, I'll put on candles instead of these bars. There, candles show it even better. I view this as a breakdown right here and a back test of the trend line. Breakdown, hit that, bounce, back tested the trend line and rolled over. That's bearish any way you slice or dice, especially coming after that 60-minute divergent high. So with this being said, I gave you my thoughts Friday. I give you my, I try to give you my thoughts every day if I have them. But this alone looks bearish. It looks like more downside. It doesn't look like a one and done over for the NASDAQ 100 because we just put in that divergent high. That's pretty substantial. And just like back here, I was saying, if you want to respect this, this divergent high, the last time, or divergent low, and that was the catalyst for the rally that we just had up to the recent highs, just like the previous divergent low. So, these 60-minute divergent highs and divergent lows, I put a big weighting on because they, not always, but very often, the major trends. This is I like to swing this 60-minute chart. I even like to get in these little micro trades. You can see when I say micro trades, little small divergences that give you, the next sell signals. And, you can trade those little microwaves, or as a swing trader, you can trade the larger waves, divergent high, divergent low, and then divergent high, little correction. Divergent high, big drop. Divergent low, all the way up to this divergent high. So it's wash, rinse, repeat. So by this, it tells me we may see some more downside. Wouldn't bet the farm on it right now because we still have that post-election volatility, but I wanted to point that out. Again, I wanted to point out that breakdown today. Pretty impulsive so far. And same support levels I had and targets on the way up, or resistance levels should come into active support on the way down. I may tweak these lines. If I do that, I'll get a chart out to you guys tomorrow morning or later today. All right, a couple more. ES, S&P 500 futures. All right, we were way up here this morning. We had divergence here. Actually, I had that divergent high line. I'm going to move that back to where I had it. That was our divergent high. That was that last trading, that pullback trade we had targeting this trend line. And look where we hit today. And this is a live chart. These are the futures. Look at that, right back to the trend line. When you get too far away from a trend line, as well as a moving average, whether it's a 50-day, 200-day, you usually, any security or an index will come back at some point to revisit it. And the farther you get away from that, think of it like a rubber band. You're really stretched. In this case, ES got way ahead of the trend line. Over here, we had a bounce, come back and visit. Bounce, come back and visit. Bounce, come back and visit the trend line. We got way ahead of it. And so what happens is the ensuing snapback is usually pretty sharp. And that's a heck of a fade. Again, you have to give the bulls points. They closed it up today. At the end of the day, that's the most important thing is they closed it, green close. They still held on to some of the gains, but they gave up most of the gains. That's about a 3.4% give back off the highs this morning. And that is support. So back to where we're at. If you're an ES trader and you're of the glass half full views right now, meaning the market's going higher, there's your buying op. You buy pullbacks to support with a stop somewhat below. I can give you another support level in case that gets taken out. We do have a reaction high here and a little gap right there in the futures as well. So about 35.20. I'm going to put that line out for you ES traders. So, if you buy the trend line and you're bullish, I would personally, if I were to do it, I'm not going to right now. Better fish to fry elsewhere, in my opinion. I'd have a stop a little bit below there. And if you're looking to short ES, there's not a lot of strong evidence to short it, especially after what happened today, but you'd want to see that level get taken out, the trend line and 35.20. If just the trend line goes, it could be a little momentum fueled overshoot and then you snap back up. So that's the level you want. And then here's your first target and second target and so forth and so on. RTY, that's your small cap index futures, the Russell 2000 small cap index. And there's your trend line. We haven't hit it yet. Here's a good point of how divergences don't always play out. And this one got trumped by the news. In other words, heading into the close on Friday, we had a nice bearish rising wedge there. No sell signals, but you had the negative divergence building. And then over the weekend, whether it was, you want to say it was a Biden win, that rallied the market, great, go with that. I mean, no one can sit there and argue it, but I just made a very good point. Do the same. Pull the S&P 500. If you have a program similar to what I'm using, TC 2000, you can sort by the percentage winners and losers. And to me, it was a no-brainer. Everything that I just pointed out, retail stores, hotels, casinos, travel agencies, things like that, that's what was up. And that would show they're not pro-Biden. Biden's not pro-casino, Ross stores and Expedia and Las Vegas Sands. So that would show that was the market rallying today, primarily, if not exclusively, on the results of that vaccine. So with that, I just wanted to get that out there. And then this is an example of where news can trump the charts. We had that divergence. Now, we didn't have a sell signal. So again, it's not like, that was a failed breakdown or anything. It just was a potential bearish pattern that never triggered an entry, and then the divergences have since been foiled, meaning we made new highs here in the indicators, above those previous highs. Okay, pullback target, well, support, all I can give you, Russell 2000s at a new high or new multi, here, let me pull the chart of IWM, but on the futures here, that would be your objective buy point if you're looking to buy. And if you're looking to short, if you think there's more downside, a break of that trend line, that'd probably bring us back here to about 1634. I don't have a very strong opinion on that. I don't know if I already covered this, the uptrend line on the 60-minute chart of IWM. Same story, you're right there, very close to the uptrend line. And there's that big old gap to be backfilled. Big gap. So that would be a target if that trend line goes. And that would be a pretty nice trade if you got it on IWM or RTY. That gap there is about 3.5% below where we closed today. Daily chart on IWM, it is we took out that 2018 high, so that's a new high on IWM. Unfortunately for IWM, and that doesn't mean it won't continue to go up, but it is also, there's that divergence. You can see I had a potential divergence line extended. Now it's legitimate. Now they're not confirmed divergence. By that I mean the momentum is to the upside. These are momentum indicators. If the momentum continues to go up, then these momentum indicators continue to go up, and then we no longer have divergence. If we reverse soon, and right now, that big green candle, even though we faded a lot of that rally today, it's still a big green candle. We closed up almost 4%, and that's nothing but bullish. You'd want to see that faded, and I already gave you, one first pullback target would be the bottom of the gap. But then if that happens, if we go much more than that, that'd be okay to drop below there. Much more than that, you're going to have a failed breakout. So there's one to watch going forward. If you are bullish on the market and the economy, nothing wrong with going long here, adding to longs or taking long positions. SPY broke out, IWM broke out. QQQ is yet to do so, but you could do that. You just want to have the appropriate stops in place or watch what happens over the next week or so. Okay, guys, long video. Lots of stuff, lots of moving parts to take in right now. At the end of the day, I still think it's, I'm still attributing that, well, you can say what you want. It's post-election volatility. Volatility, again, can go to the upside and downside. And again, today was downside volatility. And again, very unusual to see that big red candle, down to, that's not it, QQQ, that was a QQQ equal weighted or something. A 2% drop in the NASDAQ 100 in those big gains in the S&P and small caps. Unusual and a bit of a red flag, but as I say, one day doesn't make a trend. So let's watch. What will the trend be? Will we see more buying in these leisure stocks? The stocks that'll benefit from a true, effective vaccine, or are those going to prove to be one-day wonders? And then again, if there is more of a broad-based rally, broad-based participation, do these market leaders start to pick back up? Because Microsoft, Amazon, all those stocks were doing fine before COVID. It's not like Zoom. Obviously, Zoom won the lottery when COVID hit, because of their business model and had that big rally. But Microsoft, Amazon, their business models, it certainly played into, especially with Amazon, but those stocks shouldn't be getting pounded down. If the economy continues strong and the market goes new highs, the market leaders should be moving up there with them. And that's what I'll be watching for. All right, I said long video. I'm just going to say coffee. I didn't do an update on it earlier today. Still good. Broke out of that bullish falling wedge, hit that first target. Still there. Needs a pop above 108.60. I still like it. With the positive divergence. What else was there that I've covered recently? Oh, gold covered today. No change. Gold is, I'm going to find it for you here in just 1 second. I have so many charts down below. There it is. Remember the update. If you saw the video earlier today, I said objective long entry on this. We had a momentum fueled break, and right about then we reversed. And so we hit that. I put a line there because that's that previous reaction low at about 1852. We hit that. and we bounced back and we closed right on the trend line today. So again, if we can recover that, I think gold can bounce up to as much as that downtrend line, maybe that 1914 level, but we're right on the trend line. So this can also be a back test with more downside to come. So to me, it's simple. If you're long gold, you should have a stop not far at all now, especially because we already put in that reaction low below today's reaction low. Silver, you got more of a bounce out of. Silver futures, these are gold futures. Silver slightly took out that potential. Remember at the time today I said it was only a potential trend line because we didn't have a third reaction yet, and I pointed out 23,672 support just below, big support level, much more defined. This, in other words, this really wasn't a trend line because it never had that third reaction. So we hit that and we got a bounce there as well, and that would be again upside target 24,833, but you also want to watch gold. And that's it. The only other thing that really jumped out to me today is that XLE, that bullish falling wedge I pointed out last week, broke out and closed. Those energy stocks held up above that 233 support. This is one I'll be watching, and I'll dig up some individual energy stocks as well. If we continue to, if this theme of COVID not going to be a problem anymore continues, then yeah, this should be there should be more upside, I think, definitely in the energy stocks and maybe some of those leisure and transportation stocks as well. Okay, we're going to wrap it up here. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.